What's going on, team? Welcome back to Start Swing Trade. You guys know where you're at. I'm excited to get into today's show. We got a lot to talk about. We're going to get into, of course, what is going on. We got ourselves a little bit of a rally. Could it be? Yes, it seems like we got a little bit of a rally. We are rallying here. We're at 395.20s on the SPY. And this all happened with what? Bank concerns going away. I don't know, team. I'll tell you right now, I know that I didn't trade in the financial crisis time, and maybe that's just it. I'm a young blood. I don't understand trading these times, and that's okay, right? I don't have experience trading in the financial crisis. But I can tell you, at least from my perspective, I feel like everything has been overblown because, yes, we have seen some banks disappear. But in my case, I look at every time one of these concerns come up, and it seems like either a bank, a government, or somehow, some way, we step in there and backstop these banks, backstop the worrying, backstop pretty much everything. We have like this huge band-aid that we don't mind just putting on everything right now. And with that being said, is this just blown out of proportion? And are we just giving ourselves an advantage, if anything, to get closer to the interest rates not being raised? And of course, closer to the Fed pivot. The pivot. That's what everyone's waiting to see. Well, tech names definitely are showing us right now that, yeah, you can see it. Tech names just ripping. Microsoft today, Google ripping higher, Apple just pushing higher, back to 155, almost 156. And look at this chart. This looks bullish to me. Apple making its way here, now looking like it really wants to take off towards 160. This actually long-term chart doesn't look too bad, right? Well, now we really need to be thinking, did we blow those things out of proportion, right? JPM starting to come back today. You guys can take a look at the 15 minutes. You went through a new low, undercut and rally, right back up there towards 131. And you even got into some of this gap zone, right? And I think this is important, how you even drove up to that. And now you're rejecting a little bit. So keep that in mind, right? We are rejecting that kind of move into the 134. So we got to keep our eyes out, right? Today, FRC, of course, getting news out there that they're going to be pretty much infusing deposits into FRC to kind of come in and save the day. You guys see this one. I was looking at this one right around the VWAP when it popped above here, was thinking, I wanted to go after it, but this just seemed too much risk today, team. So I didn't take the swing in FRC, but it would have been a nice one. It would have been about a 70% winner here for FRC, but I didn't take the shot. And to each his own, right? We always got to understand what our risk and reward is all about, where the best trades are going to be. And this was one that, yes, it would have been a little bit of a heightened risk here. Would have probably risked about 5%. But the gain there was potentially available to me. Just wasn't my type of risk concern, though. I really try not to let one trade make me or break me. This could have been one of those trades that kind of really break me. So got out of that one. Wasn't able to get into it. And I did have Zunaid in live trading that was able to tackle some of that. But you guys can see it. The bank's bouncing back. Let's talk a little bit about the trades that I closed on the day. Let's get into some of those. Oxy, closing that trade. And, of course, we gotta always catch what's really important, right? We want to go ahead and get towards our profits. Today, I was looking at Oxy, and I said, you know what? Around the 58.50 level, started coming back up through this level. And I said, that's enough for me. I'll take my gain and get out of this, right? Of course, fighting a little bit of Warren Buffett on this Oxy trade as Warren bought some more. And yeah, it could have been Warren that pushed it back. Really, I don't think it was Warren. I think it was the market ripping higher. And then we also got crude to bounce a little bit there. You guys can see that with WTI's oil price. We went from down there to 65.93s, and then we went all the way up as high as 69.21. So the big thing for me now is watching, do we get back into the 70 handle for crude oil? If crude oil goes ahead and turns back around, I can get re-short on Oxy, especially if I can get it near my entry, right? I was able to make 5, 6%, then potentially 7%, was looking for the last little profit towards 10%. Wasn't able to get that one. But if I can come back and take this swing right back down, I'll take it. I can tell you right now, I'm looking to re-short into the oil names after this pop, because it doesn't mean by any means that oil is out of the realm. And take a look here on this daily chart. XLE could easily keep breaking down. Of course, this could be a little bit of a turnaround here. And so I'm not saying that I'm always right. We'll see what happens here, right? Is this kind of more of a trend line that's starting to hold here and you make your way back towards, like, let's say 82s? Well, that's why I'm not going shorting right now on Oxy, because I got in here around the 60s. I think we could get another rejection into that 60 handle. So we'll see what happens here in Oxy. Also got out of Chevron today, and this one was going lower out the gates. It got down there below towards 150. We got in this one at 161.95, and that was all the way up here, team. So, I mean, this was one that we just took the profits and ran. I mean, sometimes you got to understand, like, there's no point in me battling this anymore. It gave it the chance to keep going through that 150. It bounced a little bit, got out of there at 154.51 when it started coming back towards that 155, and took the profits and run. Sometimes you got to go ahead and just take the money. Can't go wrong. Mitch is going to get it handling him shorting in oil. I would go long. I don't think so. I mean, look what I got. That was a pretty good swing, right? I mean, 6%. There's still concern. Now, the big thing here is all about the banks and that kind of concern coming in. Because if the SPY didn't do this today, I'm telling you, it would have been a little different story in the oil game. So at this point, now what we want to be looking at is, what is the next kind of swing, right? What's the next momentum move, right? Well, the big thing that I think we need to now watch is what's going to happen with, like, KRE, like the regional banking ETF. This is one way to take a look at this, right? Because from here on out, we need to start thinking, what's going to be it? Is it going to be that the bank situation is completely done and that the Fed is going to be like, well, we see financial instability out there, so we're going to slow down, pause the interest rates right now, and then look to see if we need to keep raising interest rates? Or will they look into the bank situation, see that everything got backstopped, see that there's nothing going down any further, and go ahead and say that they do not see financial instability, that this seems to be more towards one bank situation, and they want to continue raising rates? Option C, they can go ahead and say, you know what? We do see financial instability, but inflation is more of a importance to us. And so we're going to go ahead and still raise rates on that end. There's so many opportunities here and so many options that the Fed can take. This is where it gets really difficult. I think as an investor, you can't even know which way it's going to go. As a trader, the only thing that we can do is kind of wait. And that's why I'm not taking too many swing trades today. I do have one open right now. We'll get into that. But like always, certain times I'm not going to feel like we have an edge on knowing where the setups are leaning to. In tech, I can tell you that's pointing to the upside. I don't have any of these. There was one that I was looking at today that I'll bring up when we get into what was hot and what was not. But definitely just keeping in a mentality that there's a lot of possibilities here for the Fed to take different turns. I think 25 basis points seems reasonable. I agree with that, Walter. But the only thing that we have to start thinking about that is, how will the market react to that? Is that a positive thing because the end of the rates are coming near. All things to keep in mind, but we'll just have to keep an eye out to see what happens with the Fed. All right, let's go back to the KRE. And of course, let's get into my new trade of the day. I wanted to take a shot on what? On, of course, the banning of the TikTok. Where's those TikTokers out there? Let's go to Snapchat. Of course, this comes after the Biden administration pretty much told TikTok that they needed to kind of spin off their share or face a U.S. ban. So I took this trade here on the pullback levels, and it's very important, to try to take some opportunities when you see them. This one seemed to me more like a trade that I could make a shot in. So I took the shot. Snap here, got in there at 1063 on the pullback. That was down here, right off of this little bounce. I'm sorry about that, team. I didn't put the screen up. Let me put it up like this so you guys can see it. All right, so on that bounce here, that's where I got in, 1063. Now it's up there at 1112s. I'm up about 4.5% on this name and looking to make, 5 to 6% on it just on the first kind of move. Then looking to make potentially 8% for this move. But the first move is going to be into the 20s. I've been looking for this move back into this high here from pre-market. And that's going to get us our first profit. That would be a nice kind of 6% gain, 5.6% in that area. We'll see if we can get this lift into that 1120s. And then we can look to see if we continue expanding on the dailies. Dailies next stop here is going to be to try to fill in this little gap here on the kind of pullback levels. That would push us into the 1140s up towards 1175. And that could be a really good gain here on Snap. This one has a nice bullish looking chart right now. We're getting volume to come back in the name right now on this move. So I kind of like this. I'm going to keep swinging this. We'll look to take some profits, of course. If we can take some profits today, I don't mind, but I'll be watching to see if we can get into kind of that 1120s. I'm going to set an alert here to kind of alert me just in case we get to it while I'm doing the show. All right, let's keep going. We'll take a look at the next question. Brian, be careful with Snap. Mitch, Meta is reporting earnings after the close. Meta. That is true. That is true. Meta could ruin this, right? But I don't know. Is Meta really going to ruin it on a day like today? I think they can maybe even kick it out the waters. You honestly never know about Meta. And I'm going to be as honest as I can be. You guys know I'm always transparent. I know a lot of times earnings, I did not know Meta's reporting earnings tomorrow. So thank you for keeping me in check there, Brian. And that's what it's all about. You guys know I'm always transparent. And I'm going to tell you guys when you guys may have caught me on that one. But I'll tell you right now, as long as could get first profits, especially if it can get a little push here into the close, I'm going to take the first profit and probably take the swing overnight. It's already deeper into the green. And Meta's been looking good on the chart wise. Now it's just going to be more about the earnings, or did they set the bar too high here? On a day like today, I don't feel too bad about earnings because the environment's good right now. I mean, we're getting this nice little uplift, right? It might be that it's a little bit too far, but I can say at least it's not a big red day and then they're coming with the earnings. So something to keep in mind. Google, they're raising my YouTube TV stream price. Isn't first time in 3 years. Well, if you use YouTube TV for that streaming service, Jay, I would recommend you look into maybe Sling TV. I know that's the one that I use, and it's a lot cheaper than YouTube TV. But YouTube TV does have some channels that maybe Sling doesn't. But that's just the one that I tend to use. Fubo's all right, but Fubo's pretty expensive. And then I've used Hulu TV once. That really wasn't the best. I really don't like Hulu TV, but it's in between YouTube and Sling. So if you want to check that out, just mentioning some streamers there, Jay, for you. But Google, big takeoff, and Microsoft. If I would have known there was an AI event at 11, Might have taken a shot on this one. This one definitely got the motor going. Technology with a big move today, 2.89%. And I got to give another shout out to my man, Dennis Dick out there. If you guys don't know who Dennis Dick is, well, you're definitely probably not watching pre-market prep, and you need to, because this is very important. Take a look at this now. Technology making an undercut and rally move. What do we call an undercut and rally move? Well, when you undercut the support and you come back with high volume the next couple of days, you can see it here. I'm going to lower the RSI just so you guys can see that volume. You see how volume actually popped on that day? That's an actually important look. That's the undercut and rally. Now you're getting more volume coming into the breakout to the upside. Now we're going to really look to see if we're going to get some of these technology names to run. Now, one name that I was really on my radar, and it was just because it was lagging behind. What do I mean by lagging behind is I always look at leaders and laggards, right? This is the way I look at relationships a lot of the time. And NVIDIA overall, look at how NVIDIA is pushing higher, right? Well, NVIDIA gets me to think, well, all right, let's start taking a look at the semiconductors. Which ones haven't left the station? Well, let's start taking a look. AMD, that one's beyond left the station, man. Somebody got on that bad boy and is ripping. Undercut and rally, shorts are trapped. Agree with you, Jet. When that happens, shorts do get trapped. And it shows you also that undercut and rally, shorts are trapped too there because you're getting the higher volume, right? They're getting squeezed out. They're having to get out on probably the offer while people are buying up that offer, causing more volume to come into the name. But look at that big rip on AMD. What a nice move here, team. We were looking at this one February 24th. We created this trend line. It's been respecting it. And I always love when stocks do this type of move. We call it the throwback move in technicals. When you get a stock to break out from the trend line, I look for this all the time. Sometimes I even will sell into the first move, looking to buy back on the kind of where you bought it from. Let's say you bought on this day for the trend line break at the 82s. As you got up there to 87, that was a nice 8% gain. You could have taken that completely off, or maybe you sold half. You could have bought that half right back there at 82s, maybe risked about $1, got right back up here towards the 96. Throwback looks are some of the best ways to really look for that nice pullback, step back in and take off the name, especially through this daily high as you fought it here with that first little spike towards 87, 80s. AMD looking really strong here. So I started thinking, what about Micron? Micron was one of the first stocks that warned us about the situations that were going on in the semiconductor space. So I was thinking maybe that could get the lift today. And boy, did it start getting a move. You can see here on the daily chart, this was in nowhere, in no man's land. If I pull this to the left and I take away today, this just looks like it's just been on a downtrend, even though NVIDIA has been pushing higher, right? Well, this one is what gave me a little bit more of that leader laggard look. And then today, nice little lift off. I was looking at it today. I was like, man, can I get a pullback to like 53.50s? Should I take the shot here at 54.50s? Because it's already 11. I was like, you know what? I'm going to leave it alone. I think I could get a shot to 54. Boom. This thing started taking off. Now it's up there to 56.42s. I would keep this one on my radar if I'm looking for positions. I need some pullback action, but this is really starting to get moving here. Micron off the bottom. And I feel like, now you really have some bottoming action to go off of. Reversal through that 55. We'll see if we can get some pullback to 54. That was where I was trying to get it today, and we'll find out. But definitely some good lift here in the semiconductor space. So with that being said, take a look at like stocks like AMAT, that this really hasn't taken off, but really starting now to push. A lot of these semiconductor names are going to start really looking good. I would keep my eye on these, even if they are already kind of taking off like an AMD. We just got to be careful for quick pullbacks, but a lot of these could get a nice little lift. Another one that's off the bottom right now, Marvell Technologies. just got hit, right? Was pulling back. Well, look at the reaction today to the price action. This has not been going great. And now today, big move back to the upside. So this is one that I'll definitely be watching also, right? Leader, laggard. We want to always be looking sometimes for the bigger names to be leading us. And yes, maybe not all the names are going with it at once, but once the market agrees with the move, and it seems like we're getting that uplift, you guys can see it in the Qs. The Qs are looking really strong right now. And the reason I'm going through this today, team, is that I don't have too many swings, so I'd rather talk about ways that we could be capitalizing on the momentum, right? So look at the Qs. This looks very bullish, at least in the short term, right? Now you're really starting to push back above the 300s. We'll look for 300s to hold on the Qs for any pullback towards like 299.30s. Next stop can really start pushing here. And you can see here, now we got some levels to start going through. 308.55, then into the 310 handle. Then we can start pushing back towards 311. And a lot of these names can really start moving, these tech names, especially when we're having so many of the big leaders kind of also just keep driving, right? If Apple keeps driving higher, Google drives higher, Microsoft drives higher, then definitely we just got to keep these on watch. They could keep pushing for a nice little rip. And also for you day traders out there, because I know you guys still join us, look for that SOXL type of trade, right? Look how this is really taking off now. This is something that I'd keep on watch, especially as this is starting to even push on the daily chart. This doesn't look too bad there. Semiconductor bull, not something I'd swing trade, but like always, I try to help out all the traders out there. Smash the like, team. Let's see if we get some more traders in here. Looks like we got about 100 of you guys. Want to get a couple more. Smash it up, team. For only 42 cents, snap $11 straddle. I'm going to take the trade near the close in sympathy for the Meta earnings. Options are pricing in a 63-cent move. Meta could cause a bigger move. Yes, definitely could. We'll see what happens there in Snapchat. Will we get the move back to the upside? I'm still looking for a nice little lift here towards the close. We're at 11.14, 11.15. If I could get just one more little drive, I could take some profit and then look for the rest of the Snapchat trade through the Meta earnings tonight. And Meta was one of the ones that was given by Option Mike just a few weeks ago and has continued a nice run. And AMD was one that was given by Christian Fromhertz right here on this very show. So stick around, team. I'm going to try to get Christian Fromhertz on as soon as possible. I'm thinking probably next week as we get through this banking situation. I'm going to definitely like to have Christian on so that we can keep up with the relative strength. Pop and FRC, I can take a look at that in a second. Let's keep going through some of the different sectors. Financial services, of course, bouncing back today. FRC, we talked a little bit about that. It's backstopped, right? At this point, if anything, it could possibly keep squeezing, right? I mean, I'm not going to get in front of that. I definitely wanted to get it today at the VWAP, but that's way gone from there. 35 continuing to go. Not going to touch this. Wall, another bank, right? This was pretty low. This had gotten down to $10. And now, if you see it from that point where it was down on Monday at $7.46, this is now back towards 38. That's a 400% move, team. That is just crazy. I'll tell you right now, this is insane. Like I can't imagine if I was invested in Wall and just a few months ago, this stock was trading at $80. And then it went down there towards $7.46. And now it's back up to 40. It's going to be very frustrating, especially for investors that sold on that type of day. Maybe they sold just because they got even a margin call. I mean, let's just be honest, team. If you had this at 80 or 76 and the stock went down to $7, very likely you probably got yourself a margin call. So not what you want to be hearing there in Wall. All right, let's keep going. Let's take a look at some other names. Let's go to the SPY. Let's take a look at the leading stocks on the day. Of course, FRC shows up there. AMD, RCL, Royal Caribbean. Carnival getting a little bit of a bounce. That is interesting here. We were talking about this. Would we get back there towards the 810 on Carnival? And as we start coming back, one stock that I'm keeping a close eye on is American Airlines. Of course, this is because I've been thinking about rebuying this around the 14s. We are balancing here around the 14s. The only thing that concerns me now is the bank situation done? This is why I'm not taking so many swing trades right now. You know, it's hard. It's hard right now because I want to take some more swings, but I have no idea if we're going to hear some new bank concerns in the next day or two. So I'm just trying to get this week done with. If I can get through this week, keep taking a couple of swing trades, just looking to make a couple of base hits. Oxy and Chevron were definitely more of a home run, but that's just because they became a home run, right? We'll see what happens on these types of stocks. If I can continue making some gains in between, that's going to be fine. If I miss out on American Airlines at 14 because there's just too much market concern, that's going to be okay for me too. Now, one thing to keep in mind is that American Airlines doesn't move too often or too fast, so we could kind of manage the risk. But of course, there's always overnight risk, and I don't like dealing with overnight risk. UAL, of course, came in with that surprise cut in their kind of outlook, and that's also another concern, right? Some of these turned around really heavy. I don't want to just jump in to a falling knife. Let's go to energy. Energy, of course, XOM bouncing back today. I talked about how I got out of Oxy. Going to look for these to come back here, at least towards around this support. If we can come back here towards, let's say, 104s, 105s, I think that's could definitely be a potential for me to get short on XOM. It just needs to get back there. I'm not going to rush towards the trade to get short oil again. I'm going to let it build, let it build, let it build, and then look for the next swing lower into the 60s, maybe even the 50 for crude. That's what I think is going to really matter. Goldman, Morgan, PNC, Truist, U.S. Bancorp to put deposits. Yeah, I mean, the backstops, team. It just seems like there's so many backstops in the banks that's taking away the worry. I mean, the SPY wouldn't be making a move like this if the worrying was still financial crisis. Like, I don't think that's what it is right now. And right now, it's difficult, right? Like, I feel like too many talking heads are making this seems like it's a bigger negative thing than what it is because the market isn't showing me that. I think if this was really a financial crisis, we should be seeing the market back down towards like 360. Instead, we're seeing it hang out up here close to 400, close to the throwback look on the market, right? Throwback look right here, team. You see that bounce? If it comes back above the range, just the same way we looked at it for kind of stocks earlier on like AMD's throwback look, right? Do you just get this move back and then just take off? That's definitely a potential. I'm not saying that this is going to happen. And you guys know I'm more long-term bearish. And that's just because there's a bear in me somewhere. But who knows? Will we get back there to 400? And if we get back to 400 and for some reason these bank concerns go away, did the big moves in these tech names just start to take off and continue this ride higher? We'll have to find out. Deutsche. This bank, I thought about shorting Deutsche Bank around the 12s. Could they come out with some concern? I've talked about it, but I'll tell you right now, I'm not getting into this. I'm not even touching. All right, we'll see what happens to these. Let's go back to Snap. Looking for that move into the 1120s. Not getting it, team. It's hanging out here. 1, 2, 3, 4. Can't get through here. We'll see if we're able to get this little push into the 1115s here for Snap. Just looking to see if I could at least take some profits, right? That's what I'm looking to do right before Meta's earnings tonight. We'll see how that kind of comes in. But there could be some more stocks, of course, on the radar today. Just got to keep on watch. I know Intel's been one that's been getting the bounce here. I know that there's a lot of people that are probably like me and say, no. Intel, no, we like AMD. But this one's also playing a little catch up, right? Look how this turnaround's going. This looks pretty strong now, at least from that turning around aspect, right? So now I think you can start looking for maybe some pullback opportunities in Intel, but this looks really strong. I mean, it's up on the day about 6.2%, really rejected that breakdown back through 25s. So you're right back up there. You've been to this level 1, 2, 3. Now the fourth time, if you can get through this wick here on the left, I think you can really start getting that 200 day to come into play, right? You see how the wick even comes right near that 200 day. Of course, as you get a little bit higher, the 200 day could slightly go a little bit higher here, but with this 31.17, I think we could get back up there for Intel, especially if we're going to continue rips like this on NVIDIA and AMD. Look at those stocks just pushing higher. I mean, to think about it, I mean, NVIDIA has been a monster since October, almost 140% there for NVIDIA. Pissed I missed Fastly in the single digits. Great 3 days. Yes. Fastly did get right back up there. This one was interesting. It has a nice little 15, nice little push there. Boom, right back up there. So we'll see what happens here. FSLY, nice little move back above the 16. We talked about this daily. When did we draw this? Drew this on March 15th. So not a bad little move there. That was when the stock was right about here on this move, right? So yesterday we drew this right here. We're looking for the 15 break. Nice little push back towards 16. Nice little stop right at resistance, right? Next stop will be 17 on this one. Can it get back up there? And from there, definitely you're going to start running into some different resistance level around 1667 and then towards the 20s. We'll see what happens there. FSLY. All right, Jay Pow Pow. You know it. Jay is mad. Watch out. Uh-oh. Jay's mad. We got to take cover here. All right, let's get into the market. How are we doing right now? We still pushing a little bit higher? Yeah, it seems like we are. We're up there towards 395.80s. We just got towards 396.13. It's going to be that type of day, team, where a lot of people will be looking back. And yeah, it's that hindsight 2020 type of day where you got this big breakout. I know a lot of people will probably say that they were expecting this, but I don't think too many people were expecting anything really, or at least we're going to be right on expectations, at least right now. There's just too much uncertainty out there. And so it's very difficult to kind of call the market when there's this much uncertainty. Let's just be honest. All right, in a second, I'm going to be getting Ryan Rozbiani on, our guest today, but definitely smash the like. I see MRO mentioned in the chat. We can take a look there. All right, MRO at 2182s. Can that continue going? One thing that I would look for is, does the 25 start playing as resistance? That's the way I feel about these oil names. I think they could get a bounce and then rejection. So yes, it is cracked. Yes, it could come back. But in my eyes, these stocks have already cracked. And I'll be looking to see if they come up to these level and then just do the rejection move, right? So come up and then just get to the point, boom, where they reject that and then work their way right back down. It's going to be about crude overall. Does it get back there to the 72 handle, or does it stay into the 60s and maybe even goes down into the 50s? A lot of people were expecting crude to stay between kind of the 72s and the 80s. Well, now you're seeing it back into the 60s, and it's starting to fade off here towards the close. All right, that's going to do it for me, at least on my outlook. I'm going to pull my charts down, and we'll bring on our guest today. We got Ryan Rozbiani. Definitely, if you guys haven't checked him out, he's been on plenty of different Benzinga shows. He's had his own. And I'm looking to maybe get a new one from Ryan Rozbiani. Let's bring him on here. You guys know him. What's up, Ryan? How we doing?
My man, Mitch. How you doing, buddy?
Hey, another day in this market, and the uncertainty is as great as it's ever been for at least. You know how that one works out, and
yeah, man,
it's uncertainty. But I just feel like it's been heightened. That's for sure. And I know that you're probably like me. We didn't trade through the financial crisis, So maybe we aren't as scared as
No,
some of
man, I was in
the other
elementary school
traders out
during the
there.
financial crisis.
I thought you were trading in your Pampers, bro. Come
No,
on,
man, I
Ryan.
was trading Doritos for Oreos. That's what I was trading during the financial crisis.
Hey, my lunch for your lunch, right? That kind of thing.
Deal.
But yeah, definitely. And I feel like those traders, I can't blame them for having a little bit of fear, right? Because
Sure.
I'm sure they went through a really tough time, right? Like,
Right.
and that caused some like confirmation bias. And
Right.
I think even we have a tendency whenever we go through crisis to try to compare them, right? Oh, is this another financial crisis? The same one, right? That happened in the past. And I feel like this kind of thinking can really kind of blind us
Right.
as traders, right? And that's the number one thing that I think that we got to try not to do, right? Get to the
Right.
point where we're literally just blindsided by a confirmation bias. And I feel like, I mean, everything that I've seen, yes, we've had some scares, banks coming down, but everything gets backstopped, man. Everything gets the
that's the thing.
Band-Aid on it.
Yeah, that's the thing that everyone forgets about is that do we really think that the government's going to let's just say for lack of comparison, the world's most powerful country default on its money and have a run on the banks? Absolutely not. There's going to be something that's going to step in or you can't just destroy the legitimacy of the United States of America by not stepping in and doing anything here. And they did a good job. I mean, they did it much quicker than what I thought it was going to take. They moved quickly. They're doing it. Are we out of the woods? Absolutely not. I think we're going to see more cracks in the foundation here, and we're going to see all those laws that were put in during Dodd-Frank in 2008 getting tested here. This is the ultimate stress test for the financial industry, and if they come out the other end, I think that it'll be really good. And if we see more cracks in the foundation that need to be mended, I'm sure they'll step in and fix it. Of course, I think the biggest fear that everyone has here is all this money going to cause more inflation? Is this going to cause a lot more chaos? We'll have to see. They're claiming that this isn't taxpayer money. They're claiming they're not printing money. This is from like a reserve. But we won't know. It'll have to stand the test of time. They said like the COVID checks and all the PPE loans weren't going to cause inflation, but they did. So we'll have to see how all that plays out. There's a lot of looking forward to do. But in terms of the markets, I'm a little bit, honestly, happy to see that the markets didn't overreact in a way that I thought they would. I was expecting much more sell-offs, much more panic, and the markets held their own. Yes, we had sell-offs and everything went crazy, but I personally expected much more chaos. And we got chaos, but it wasn't as bad of a chaos as I thought it would be. And we're seeing a nice recovery today. And I think, honestly, the only two things that I can attribute to today's massive recovery is the good CPI and PPI report that we got. Now, the thing with CPI is we're so used to getting the right away reaction when it's negative that day. But if you back test CPI, you'll see that it has a 2 to 3 day delayed reaction, usually, even if it's good or bad. The past few have been direct, but the last two that we've had have had a delayed reaction. And we're seeing now the delayed positive reaction to CPI. Or, as some people would like to say, the conspiracy theorists would say, they're running it up so they can get their cheap puts for everyone to see next week. So that's kind of the situation that I'm seeing here. But honestly, it's still a trader's market. The opportunities are there to be for the taking, whether you're trading SPY, you're trading Apple. Amazon had a massive move. I was talking to my team last night. I was looking at the hourly chart on Amazon, extended hours off, 200 MA. I was looking at it. I was like, this thing looks prime for a pop off that thing. And it just, as we can see here, it exploded and it had a massive, massive, beautiful move. And it made its move. Now, is this going to hold for the next 5 to 7 trading sessions? I don't know. We have too many unknowns. There's too much uncertainty. But I do know, as if I traded this, it's a good position to take profits on. You enter on the break, you wait for a confirmation, you take profits on your way up.
Yeah, I mean, a lot of these tech stocks with a big rip today. I mean, it definitely wasn't a bad little profit take if you were able to, especially even just day trade this. But it seemed like the tech stocks climbing the wall of worry for us. And if anything, the tech stocks were saying, yeah, pal, the writing's on the wall, my friend. You got to start thinking about pausing and pivoting. So if that's going to happen, is the tech going to be the best sector of the year? What do you think about that, Ryan?
That's very interesting. So we're at a dual-edged sword right now, right? everyone's thinking that the Fed is going to pause because of what happened with the banking sector. Now, what happened this morning was even more interesting. The ECB announced that their banks are vulnerable, then 20 minutes later announced a 50 basis point rate hike, and they're still battling inflation, and that's still a big fight that's going on. So now let's pull that over the pond and bring it to the States. Yes, our banks are having an issue, but they mended it fairly quickly. So the idea of a pause, as much as I would like that as a long-term investor, as a trader, I think that we're still losing the battle to inflation. We saw inflation numbers come out. They're okay. We gotten to the point where we've dropped it, but it's kind of like inching down now. And then there's sometimes when it pops back up. That battle still exists. And Jay Powell is really putting his heels in the ground of saying, we're trying to get to 2%. This is his last hurrah. He has to get this correct. An article came out yesterday on Bloomberg saying, like, here are all the fumbles from Jerome Powell. And I'm sure him reading that wasn't happy either to see that. So I think if we do pause, which in my opinion would be an economical mistake, we will see a massive rally trigger, because that's what everyone's been waiting for, a pause and then eventually a cut of the rates. But if we get a 25 basis point rate hike, because I think the last time I checked the Fed rate monitor tool is about 76% of the markets were pricing it on swaps for a pause. If we get a 25 basis point rate hike, parallel to what the 25% are thinking, markets are not expecting that. So you're going to see a bit of a sell-off that triggers there, whether it's the day of or the following day. So it's an interesting dual sort of dilemma. Plus, let's just take this into account as well. Just because the Fed rate monitor tool isn't showing you the 50 basis point, it's still unfortunately a possibility that could happen. Am I a fan of it? No. Am I a fan of higher unemployment? No. Am I a fan of higher rates? No. I think that the economy got way too hot. It needs to be cooled off. They reacted too late, and now if they stop too early, it's going to look even worse. And the people who end up paying the price for it are the regular people, yourself, myself. We're going to end up paying for it, and we're already paying for it. So if they pause now, it could be honestly catastrophic. And we'll see the markets react positively initially, but then when the next CPI print in 2 to 3 months comes out, and we're back to 7%, 8%, you're going to see a negative reaction, because then Jerome Powell has to come back and do 100 basis points back to back. That could honestly kick the market in the teeth, which I don't want to see personally. We've come too far to turn back now.
Yeah, I think that's one thing that I try to keep in mind. And I feel like that's where I feel like the financial crisis focused traders are also maybe just focusing on too much disaster in the banking situation. And I think that one thing that I've seen is that, yes, there might have been some financial instability, but will it be enough for Jay Powell to take his initiative off inflation? I think I'm with you, Ryan. I think that's a mistake, but maybe that's just because we're not worried about so much of a financial crisis. Because at least from what I see, I mean, if this was really a financial crisis, I would expect the SPY to be already back towards those 360s on the dailies and scaring the living hell out of us on the daily chart. But that's not what we're seeing. We're seeing the market hang in there. And if anything, we haven't even gotten back into the bearish channel. We got in there like maybe a day or two, but we're right back up there. That could have been a little bit of trick to the downside and trying to get us back into that bearish mentality, and then leaves room for that recovery of 400, 410. And I've talked about this clearly before, is that if we ever finally do get to that 420, that's where I have to flip and really call it a bull market, because that's actually 20% off the lows, right? Like if we're going to call the bear market from 20% off the highs, well, then I'll call it 20% off the lows for the bull market, right? And that still leaves room for that. So I think he's really, really just crossed in his decision making that he has to do. And it's a hard one. I'll tell you right now, Ryan, I think you're like me. I wouldn't want to be the person making the call, because it's hard, right? There is some financial instability, but how grave is it? And is it something that he needs to focus on? Because if it's just going to be that it's just going to be just what we saw right here, where Credit Suisse was already in issues. We already know that wasn't something that was a surprise. They even just gave us the information when they couldn't release their report, right? If the SEC tells you that you need to check on something, more than likely there's something bad underneath the hood, right? And so in that case, I think that's out of the way. Now, when it comes to, SVB and like this bank right here, this FRC that was, just getting completely annihilated, but it's getting backed up now. And I think that as long as that's going to continue to happen, it's going to shore up the uncertainty of true financial crisis coming.
Right.
And if that certainty is there, I think Powell has to just continue to hiking rates, hike the rates. Maybe definitely, I think the 50 basis point came off the table, even though I think it was on the table because of that PCE report.
Yeah.
That PCE report was just not what they wanted to see. And of course, that's what they tell us they look at, right? Jay Powell pretty much says that I don't even care about the CPI, but it's all about that PCE report. We'll see what happens next week. I think at this point, I think now to ask you, Ryan, how are you on like swing trades that you're taking right now? Are you taking a lot of risk, or are you maybe like myself right now where I just feel like there's just too much uncertainty? I'm just trying to take maybe a couple base hits, but not really trying to push like I usually do into the market.
Sure. So I'm going into weeks where we have CPI, PPI, FOMC, which honestly these days feels like every single weekend. I've been more in the day trader mentality for the past few months. I just day trade the action. Like for example, this morning, my plan on SPY, and I've been trading SPY almost exclusively for the past few months. I'm working on building the bot out with SPY, so I've just been trying to learn its movements. So on SPY, I was watching the 200 daily moving average on the 3-minute chart. And because I've been watching that, I was back testing a little bit, and I saw that once SPY breaks above that 200 moving average on the 3-minute, it has a nice, massive, explosive move. Now, sometimes it's not able to hold that move for a long time, and sometimes it is. And we can see here it exploded over the 200 daily moving average and made its way up. Now, was I able to hold it for the full move? No. I did scale out on the way up, but I did what I needed to do, and I was a bit of a degenerate, and I played 0-day to expiration contracts. So it was nice. But you have that portion in the morning where I was talking to my team earlier. I said, when we have these explosive moves in pre-market, we have to be patient until 10, 11, sometimes even 12 o'clock in the afternoon for this thing to kick in. The markets will tire themselves out in the morning and then keep going. If you try to trade these little micro moves here, these little 3-candle moves, you're probably going to get caught on the wrong side of it, exhaust your powder, and then you won't have enough juice to play the move here. Even here, if you look at this, even if you missed it on the 200, you had plenty of opportunities for retests and re-entries to be able to take it. Yes, RSI was hot. Yes, it is a risky move to enter when the RSI is hot. In my personal opinion, not a financial advisor, but the opportunity is there for the price action. Or the previous one we discussed, Amazon. I wasn't able to take the trade, but we can see there, planned the night before. Look at where you can see some action. I put out a tweet about this actually yesterday. I said, hey, make a plan. If the stock trades your plan, then you execute on it. And if it doesn't, you come back the next day and you go at it again. I think the unfortunate thing is too many traders have become a bit impatient because they look at social media and they see all these beautiful posts of 10,000, 5,000% posts, and people are posting all this stuff and everyone's winning and they want to be part of the party. But what they don't know is those guys are planning their plans out, planning out their plays, and they're going. So for me, it's just been day trading strictly on SPY. And my cheat code has been looking at Apple and Microsoft and Tesla, these three, to see how they're moving. And then SPY moves in respective to those because the parts of the whole make up the sum. Apple and Microsoft, once they're moving together, SPY is going to be butter. When they're moving opposites to each other, SPY is going to be in gridlock. And once they're both going down, SPY is coming home, baby. So that's kind of like the formula in the back of my head there. And Tesla was much more of a bigger player when it was up in that 250, 300 range where it had its core position there. And it's sort of there. And I think Tesla is actually setting itself up for a nice move here. There's a very small gap above this range here that it could fill. But I think that with time, it will slowly fight its way back up. What happens with Tesla is, unfortunately, it runs up into an event like an investor day, and then it sells then news. It almost always does that. And then it slowly inches its way back up until the next earnings and then sells the news again, usually. Especially if the earnings are bad, it sells really bad.
Yeah, I could see that happening, and definitely, I agree. I mean, you always got to keep your eyes on the leadership because even when Microsoft was making this kind of little pullback and Google got the fake or the bad AI Bard
that was
hit,
ridiculous.
I mean, I was watching this and I was like, man, Google's going to be a buy sooner or later, right? It's just going to,
right.
Especially with these bigger stocks, it's usually a matter of time before they give you a nice little rip back. It's just more along figuring out where do you go sideways. And I think the 90s gave you so much on Google, but now you're back up above the 100. And I mean, what's not to say that it doesn't just kind of keep ripping higher? I know Microsoft
Yeah.
had that AI event today that really pushed it right back. But I mean, this is when we were a little bit like, oh, and I got to admit, I was even a part of the crowd. I was like, maybe just this is too much hype, AI hype.
Mhm.
Well, I mean, we're about to blow
No,
past that AI hype.
I think this is the mistake that some folks are unfortunately making. I could be wrong, but I'll die on this horse right here.
Mm-hmm.
Is that I think AI is mistakenly being looked at the way that we looked at NFTs. People
Yeah.
people rightly so, NFTs were a fad. Artificial intelligence is the move from a search-based query that gives you search results and you go find the answer to here's my question and here's the answer. You completely remove the notion of you never have to go to page 2 on Google. You never have to do any of that. It answers it for you. And it's a very powerful tool that people are using. Like one of my buddies, he told us yesterday, he said, hey, our firm is using this for some legal documentation. We're actually implementing using ChatGPT, for example, which is the open AI that Microsoft is using. They're integrating it into their suites. So is Google. So I think AI plays a foundation. Now, is it something that could take Google and put them into the trillion-dollar category? I don't know if it's that powerful yet, but the potential is there. And I think what happens is we front run the potential, then we find it comes back home, levels itself out, and then slowly as the AI gets better, the stock price and market cap will catch up with it over time. That's just kind of the way that it goes. But I don't personally see AI as a fad because it's just the next leg, the next dimension of technology, in my personal opinion.
No, I mean, and that's what it's all about, right? I mean, at the end of the day, like that's what I always like to focus on in anyways, right? Because that's what we should be focusing on as investors, right? It's like not what's going to be 1 year from now, 2 years from now. What are our kids going to be doing?
Right.
Right? Are they going to be using AI in kindergarten and like rocking some laptops to school? Like, who
Well, their
knows,
kids are
right?
going to school these days in kindergarten, first grade with iPads, right? So we're not that far off.
Yeah, like I mean, it wasn't what you and I went through, right? And I think that that's what we
No.
need to be kind of thinking of in the future. That's why I look at autonomous plays. That's why I look at lithium plays if we're really going to get
Yeah.
EV things, right? And that's why I think it's not bad to think about crypto in the long term because there is going to be some further down the line blockchain technologies and
Sure.
things like this. So these are all thematic themes,
Yeah.
right? And things that we need to be kind of thinking about how they're really going to play out in our lives and where can I go investing? Who will be the winners, right? I
Right.
think, a lot of people try to think, well, Google is going to be the AI winner. No, the truth is they'll probably both be the winners, right?
Yeah.
Microsoft will win in their AIs and Google will win in their AI and they'll just
Right.
continue to give them lift, continue to give
And
them
then Apple will
control.
come in with their AI and eat everyone's lunch and go home.
Yeah.
I'm
And
still
then,
mad that Apple didn't go after ChatGPT and integrate it into Siri. It would have sent them
hmm,
straight to the $3 trillion market cap.
Amazon. Alexa, you still out there? you,
Alexa went home, man. Alexa moved back home.
you get what I mean? Like they could have easily jumped all over this. And if
Yeah,
anything,
instead of investing in Rivian, they should have invested in it.
they could have literally taken that and then just put it into the Alexas. And guess what? You would have had the AI at your house already.
Yeah, the AI would have made you an electric car that was probably better than Rivian. I'm just kidding. I don't know much about Rivian cars. I just like to
Who
joke around
knows?
when it
Who
comes to
knows?
Amazon.
But one thing that we do know is that there's going to be more and expanding things from this, opportunities. Whether that
That's the
be,
key. You said it. The key is opportunities. That's the
yeah,
key is the opportunities.
and we just got to find out which companies are going to be a part of this. Get a piece of the pie, and that should
Right.
go ahead and give them the lift. Any other names you want to mention at least before you get out of here, Ryan? Appreciate you coming on and talking
Of
markets
course,
with me
man.
today.
I love coming on here, man. You gave me nostalgia last time I came on here, and I hit you guys up. I was like, I got to come back. I got to come back to
Got you,
Benzinga.
my friend. I think it's because you and I just try to like literally like spitball a lot of times, and
Right.
we feel the markets, right? It's almost like
Yeah.
when you're so into the markets every single day, and you talk to someone that's like the same mindset. It gets you feeling it. Like you're like, man,
Right.
there's so much more to think about in the markets than we even think of, and that's why it can get very difficult if you try to cover all the different areas. Like I'm
Right.
sure you do, and I do it all the time. It's like, man, we know a little bit too many different areas.
Yeah. Sometimes
But
I'm like, what am I doing? This is just too much. I'd like to go back to a time where I didn't have to care about what a CPI print was.
yeah, I know how that can be, my friend. But any other names you want to mention before you get out of here? Maybe names you got on your radar?
Let me just check my list real quick. Actually,
Yeah.
that's a great question.
Yeah, I'll give you a second there. And like always, you guys can catch up with Ryan Rozbiani. I'm going to go ahead and throw up his Twitter here so you guys can definitely give him a follow right now. Of course, that's as simple as twitter.com at Ryan Rozbiani. But I'll throw up the link because I know how everyone's like me. Just give me a link so I can click and hit the follow.
I
There you guys
appreciate it.
have it. Throw it up there and definitely give him a follow. Check him out. He also has some different services that you guys can keep up with everything that he does. He even has a team that built an AI. So if you guys want to check out a little bit more of some alert kind of service that can get you to the next step, hey, I'll tell you right now, one thing I always love about Ryan is that you can always come to him, ask him a question about the market. He probably knows what's going on. And that's how you
I
know that my
appreciate
man
you,
keeps up with it. So any other one you want to bring in?
Yes, if we can actually pull up Meta, it's one
Meta.
that's been playing like a lot of fun opportunities. This is the thing. Everyone's looking at that massive, massive gap. They could
Mm-hmm.
possibly come. If Jerome Powell wakes up on Wednesday next week and goes, we're going 50, that gap could possibly fill. But Meta has a nice gap to the upside too.
Yeah.
It's one of those plays that you can play on both sides. It gives you a lot of nice range. Now, will that infinity pool of a gap fill? Probably it's going to take some time, and probably it's going to take Zuckerberg to stop burning some dollars to get it there. But they are chugging along. They had, as you literally have the line right there. It had the nice,
Mm-hmm.
beautiful breakout on there on Meta, which I kind of wish I played, but I didn't. You can see you have those, but you do have that new gap right there that's formed, that little gap there.
Yeah.
So that's one thing that I'd keep on my radar going into FOMC. If Hellfire breaks loose, that's a gap down potential play, in my opinion. If
Yeah.
J Powell is calm and cool, collected, and goes, "Hey, we're going to pause," you can see this thing go and probably even try to get its head right at that level that you have, that 235. It could probably go and visit that level. Probably it's not going to be a straight shot. It'll probably take a few days, but it has a path to getting up there possibly. Again, not financial advice. Don't come after me.
No, my thing with that is who knows, maybe Zuckerberg actually takes a little bit of a down step in talking about the metaverse, right? Does he take a down step and like just not even mention it? Like just start focusing more about the business, and that he is working on that, and there will be some updates in the future. But for right now, we're focused on what cost efficiency, right? That's what they want to be here, and some cost efficiency. They've been cutting the hell of a lot of workers. So I want to hear
Well, they
more about that.
overhired. They
Yeah.
overhired. The whole tech sector
Yeah.
overhired. That's what a lot of folks kind of forgot as we went into the layoff season. Unfortunately, again, I'm not a fan of people being laid off. It's a scary, terrible thing, and I don't wish it upon anyone. But these companies were literally in bidding wars for engineers. Like I remember there was articles. Amazon pays software engineer level one $160,000 for a position that's probably in the $100,000 annual salary. So they overhired. They went too far, and now they have to kind of scale back and pull back. Even now, if you look at the jobs reports that are coming out, yes, I know some people are like, they're not that great. And honestly, some of them aren't great. You're seeing a lot of these numbers fueled by part-time jobs, but they're still not as bad as we thought they would have been. We went up 475 basis points, and possibly we're going to go to 5% next week, possibly. Markets should have reacted. The labor market should have been devastated right now. We should have been on the cusp, if not in the early days of a recession. And honestly, right now, based off the unemployment stuff, it hasn't been too bad.
It hasn't really. I mean, either they're just finding jobs immediately, or there's just too many jobs out there anyways. And I mean, if there's going to be too many jobs, that number could potentially never spike again, right? I mean,
Yeah.
two open jobs for every person looking for a job,
Yeah.
and it seems like wages are still being able to hold out there. It's not like wages are just crumbling. If that's what was happening, right? If the guy
Right,
at
exactly.
McDonald's went to $15 an hour and then now is going back to $7 an hour, then I'd be like, okay, yeah, this is just a little bit of a difference. But the truth is, he's still making the $15 an hour, right?
Right.
And so I
And
think the
some places
wages,
are paying them more. You still have
yeah,
some places
man,
competing. Like the
dude.
restaurant industry is still competing for employees. Hospitality sector is still competing for employees. These sectors are still underemployed. Healthcare sector is still significantly underemployed. Tech was the one that ran up more than anyone because people were like, all right, we get to work from home. We get to upgrade our jobs. Backfills needed to be filled out for lower base positions that got upgraded. So I think that's the one sector that went too hot, and we're not really hearing from other companies laying off. It's really been mainly the tech sector that's been laying off.
Definitely. And we'll see if it actually ever catches up to the numbers, or maybe it never does, really.
I
think
hope
that
not.
a lot of
I hope
people
it doesn't
expect
catch
it.
up for people's sake.
Yeah, no, definitely. I did want to let everybody know I did right now before the close here cut half that snap just because I have no idea what will happen to Meta and Snap overnight. Had to take a little bit of profits in that, but I'm out of here, Ryan. I'm going to get you out of here. You have a good one. We'll definitely have you back, my friend. Have a great night. Take care, man.
Thank you, everyone. Bye-bye.
All right, that's going to do it for us today. Did cut a little bit of that snap. We'll see what happens there in Meta. Will we get a spike? Will we get a cut down? We'll find out tonight, team. Catch us tomorrow, Pre-Market Prep. Don't miss it, 8 a.m. Eastern, every single weekday, our flagship show. Dennis Dick with a great call on tech. We'll see what happens. Joel called the top, the high of the year. Wonder what he thinks now as we're starting to rip up. Will we go back to that high of the year? Find out tomorrow on Pre-Market Prep, and hit the thumbs up. Come check out Cannabis Insider up next. You don't got to go anywhere. If you guys want to find out what's going on in the cannabis industry, we cover it all right here on Benzinga. See you guys tomorrow. Always great to have you guys out there in the chat. Jay, Lori, Easy, Eagle, Surfer Boy in the house. What's up out there, Walter? Wessie, how you doing out there? It's good to hear you guys talking amongst yourselves, talking about the stock market. I always love to see it. Hammer, Captain, all you guys out there, appreciate you guys tuning in. Hit the like button on your way out, and I'll see you guys tomorrow bright and early.